We have a lot to unpack today in this video. The first thing I want to look at is the stimulus wilderness. We are going all over the place, and I want to bring you the information you need to know. The second thing I want to look at is the real estate jungle. What are we talking about here? The prices are going sky high along with everything else, and there's so much to know. The third thing is the Evergrande trail. Following that money trail, I'm going to give you the individual companies that are invested with Evergrande and stand to lose a bit of money here. There's so much to get to, and if you stay to the end, I'm going to give you 5 tips related to real estate, so don't miss it. Let's go. First things first, you've probably seen this already, but I want this to lead into the rest of the video. House passes bill to avoid a government shutdown and suspend the debt limit. You knew this was coming. I talked about it a few weeks ago, and I'm sure nobody out there believed that they would actually run into a debt limit. That is always going to be the case, where they just say, no worries, we'll just suspend this limit. It's always going to be that way. Why? Because the government knows one thing, and that is how to spend a lot of your money. So what does this do? This actually releases one of the potential pitfalls that we were coming into right here. Number 1, the FOMC. Are they going to taper? Number 2, the debt limit. And number 3 was some sort of infrastructure or stimulus that would allow more spending, and that would of course be beneficial to the market. So those 3 things are really the big deal right now. Speaking of the Fed faces calls to remove officials over trades that they made while setting policy. I mean, this to me is just a little bit silly at this point, because you're pointing out 1 or 2 or 3 people when it's the entire institution and its existence that is the problem. They've been devaluing the currency since their founding, and now suddenly today, because a couple guys made some big deals around what everybody knew was going to happen, that they're the bad guys. No. Don't focus on the 1 or 2. Focus on the institution. That's the important part. Now, all my coffee fans out there, unfortunately, I got some bad news, because Robusta coffee extends surge to a 4-year high as supply woes mount. This is the cheaper of the beans, as you could see if I compare it to the Arabica beans, but doesn't matter, because you can see what has happened over the last while. I mean, it's up. In the case of Arabica, it kind of did go up like crazy as there were, crop failures and so on, but it's still incredibly high, meaning you're going to pay more for your morning cup of joe. Funds go green, but sometimes in name only. So you're talking about where the money is at, where it's going to. You've got the inflation that's been picking up all throughout this period of time, and then you've got the those in the financial industry that are profiting off of it, and other companies are trying to deal with it as best they can. But we've got something else going on here. This is the ESG funds, okay? Eco-friendly. They're so eco-friendly, so green. Companies are turning their struggling funds green to capture the flood of cash into sustainable investments. This is important because it shows you what has been happening over this period of time. Look at that chart. The peak right here, if I bring out that highlighter, that's $200 billion. And that's just showing you the clean energy tech, climate aware, climate solutions, and low carbon funds total assets. There's just one problem, however. Like they said in the previous article, it's in name only. And this kind of brings me to what we'll talk about in a few minutes, but it's just showing you that all you've got to do is make a couple changes and everything's going to be okay. This is not a good sign, because it's really just about what they want to show. Oh, we want to have an ESG fund. What's in it? Apple, Amazon, Facebook, Google, all these different companies, and it doesn't do a single thing for the underlying cause. This article here, as we flip to real estate, is talking about what has happened in LA. Because with all of this inflation, with all of the mess, and where all of that money has been going, we have seen this suburbs, different areas, smaller, perhaps undesirable parts of any major city are now seeing prices going sky high. Now that Los Angeles Times is just pointing out the $1 million homes that are all across LA, I think this goes on everywhere. Startup firms help home buyers win bidding wars with all cash offers. So what this company does, because most people, hey, they need to buy these very expensive homes, these $1 million homes plus, with a mortgage because they don't have all that cash there. But unless you have all cash, you're not going to get that home. So what do? This company comes in, they pay cash for you, and then you pay them. So they're just kind of like a middleman dealing with all of this. I think it just shows you, by the way, interesting business model, but it just shows you that things have changed so much in this industry. These companies probably didn't even exist just a little while ago. Now, here's some charts related to real estate right now. I wanted to bring you something. Housing permits, single and multifamily, rental units, okay? Take a look at this. You can see the blue line. That's single family. And look at the red, multifamily. So what has been happening? More people are renting. Now, I've told you time and time again, multifamily residents are probably the number one type of real estate to get into. This is because if the conditions worsen, where do people go? They go to the multifamily residences. And you could see right here, it was really sky high in 2007 because everybody wanted to be a homeowner. They wanted a single family. And I believe there's another chart showing you similar stats. But regardless, when it bottomed out, it has been going up ever since. This has certainly been a great investment. There are still areas in the United States that, it could be a good buy. There's no doubt. It has to be cash flow positive. Stick with me to the end of the video, okay? Talk about that in a minute. Housing starts, multifamily units. You can see the year-over-year change, essentially just showing that this is doing really well at this time. And, all I'm trying to show you here is that in terms of the units, in terms of the actual units, but it's the same data I was showing you a second ago. This just gives you this insight as to what's happening, where all the money is going to. This is something that we haven't seen before. A lot of the surge here isn't just concentrated into one particular element. It's going all over the place. And I want to talk about the atrocities in the financial system I need to look at the Money GPS insights. We'll break some down, and then we're going to talk about Evergrande. Inflation is likely to continue into 2022, and that will hurt consumers big time. Consumer spending can't increase without additional stimulus. You see how these two are tied together, so pay particular attention to this. The Fed signaling their intention to taper their purchases of their assets is going to create a perfect storm. So watch very carefully what happens. Many have suggested that Evergrande is the China Lehman moment. Others would say, no, that's not the case. But I wanted to bring you back into history just really quickly to mention a couple points. You can trace the spark of the financial crisis in the late summer of 2008 to the implosion a year earlier of a couple, two esoteric, superficially unimportant hedge funds sold by Bear Stearns. Bear Stearns clients with a particular appetite to take big risks in mortgage-related stocks took a chance on investments that did not seem essential. They ultimately were. Their summer of 2007 collapse got smart investors thinking maybe it's not just these funds, maybe it's every major bank on Wall Street holding the same hard-to-price securities that will need to be marked down in price along with the decline in housing prices across the nation. And that's exactly what happened. Bear Stearns, then Lehman, stock markets start to fall like crazy, and you know the rest of the story. But the point here is that there's contagion and that there's other things going on behind the scenes. Evergrande declines further after S&P says default is likely. You probably heard that. Citi analyst latest to say the crisis is not China's Lehman moment. That's what some have said, and ultimately it's a different scenario, but we'll have to see in time. Evergrande wooed retail investors with Gucci bags and Dyson appliances. So yesterday I was telling you how they were basically, and I think this article covers it as well, of Reuters, is essentially saying that, they were going out there trying to entice the employees, their families, and all these different people to get in and buy up essentially their debt, sell it as a product so that they can keep the Ponzi scheme going, so that they can continue to develop it all. And now apparently they're giving them Dyson air purifiers. It just goes deep. Evergrande used retail financing investments to plug funding gaps. And you heard of this before in yesterday's video. If you haven't seen it already, I will link to it at the end of this one. But look at these projects and you see how crazy it is. I don't know if it was in this one, but crisis hit Chinese property developer Evergrande used billions of dollars raised by selling wealth management products to retail investors to plug funding gaps and even to pay back other wealth management investors. Now, doesn't that sound a lot like the Ponzi scheme? No, but don't worry, because it's not China's Lehman moment. Now, this is where we get down that trail, the Evergrande trail. BlackRock and HSBC funds boosted Evergrande's holdings as crisis loomed. Investors added to the bond holdings in Chinese property developer while prices began sliding. I also wanted to note the fact that this just looks really dangerous. Okay, I don't know if anybody can see this. I'm not a property developer. I'm not an engineer or an architect. This just looks really dangerous. I mean, it looks like this is like a river going through here on all these sides of it. I don't know. Anyway, different story. But look at this. I mean, they had the numbers right here. Evergrande bond prices, you could see how they have dropped. They have $300 billion of debt. We know about this. And somewhere in here, if I could find it right now, you're looking at a crisis. A very big crisis that has been brewing. Some of Evergrande's dollar bonds are trading below 30 cents on the dollar. Its paper is held by a dozen fixed income ETFs run by managers such as BlackRock, Van Eck, JP Morgan, and Legal & General. Between the 12 ETFs, many of them, Asia or emerging market high yield vehicles, have seen rapid growth in their assets this year. Their net inflows $13 billion in December. Their aggregate assets $25 billion. This is not a small sum. Look at this. The assets of BlackRock's this particular one quadruple from 148 million to the end of 2020. Okay, end of 2020. So it was looking bad at that time. Now 593. So they are actively picking this stuff up. It's not a good thing. That is never a good thing to see that. And then right here, in the Financial Times, they're basically saying that you don't have to worry. Everything is going to be okay. This is not Lehman. This is just a small issue that the Chinese government is going to take care of. I don't know what's going to happen, but I know it's going to be messy. It's going to be messy. Then, it's just more of the same. They're all of the media right now. It's funny. They've all posted their own articles, their own insights, analysts everywhere. You had Jim Cramer, everybody. Don't worry, this is not Lehman Brothers. And if they didn't say it, maybe I could agree with it. But the fact that they all did this, it seems rather strange to me. What do you think? And then really quickly, I want to show you this. This is a PDF. I'm pulling out these every single day if I can. I'm creating them, and hopefully we'll get to this every single day. 5 tips for real estate investors. You with me? Let's go quickly. The 4 ways. Real estate makes money in 4 ways. That's why it's so attractive to investors. Appreciation, depreciation, amortization, and taxes. Okay, really, really key. Okay, then you got the cash out refinance. Imagine you've got this is an investment property, or you've got a renter in there paying every month. They're paying down that mortgage, and I can extract that from there, renegotiate the terms of the mortgage. Everything's all good. I'm not taking all of the equity out. Let's say I take a portion of that equity out, and now I can use it for a different investment. And now I'm able to get that individual to continue to pay down that mortgage, and they continue the process. This is what investors do all the time, especially if they're doing it wisely and they're not taking big risks with it. Debt, the way this works, think about this, as they say in the bottom here. If the property makes 5% income, but the debt on that property is 3%, your spread is 2%. You're actually making the 2% on the bank's money, not yours. So you got your down payment. That's all free and clear. But think about this, the bank's money, what they're lending you, you're making money on it. I mean, it's so crazy. They don't do that for your stocks. They don't do that for your cryptos. They don't do that kind of thing. This is unbelievable to think about. While you have somebody paying your debt, your asset is being built up. It's crazy. And then data. Okay, you want to look for the building permits. What kind of development is going on in your area? You want to look for vacancy rates. You want to see are the jobs generally moving in or are they moving out of that city? What are the recent price trends? Unjustified growth or lagging behind? All of these are important pieces to know when you're looking for an investment property. And then resources. airdna.co. That's a website to see the short-term rentals in your area or the one you're interested in. Zillow, of course, I'm sure everybody knows that. LoopNet is like Zillow, but for commercial property. Earlier, we talked about the commercial properties and multifamily residences. That's where you would look on. And then we have Trading Economics, any statistic that you can think of, and then Black Knight Inc. Black Knight Inc. is a great resource, lots of reports, lots of good stuff. Look, all of these PDFs and everything, I'm trying to make them available in the Insider. So if you're not already an Insider, it's totally free. You can get it right here at this card or at themoneygps.com. If you appreciated all of this information, all you got to do is hit that thumbs up button. If you want the Fed to rain money from the skies, all you got to do is hit that thumbs up button. If you haven't seen this video yet, you've definitely got to check it out. Just click it and I'll see you there.